Let's begin our conversation straight on with fundamentals of product and service costing. When you think about product and service costing, let's think about a particular type of organization. Visualize an organization that sells, um, let me think, paint. And they sell paint and they sell it to a particular organization like Lowe's or Ace Hardware. Now, think about that product, whatever that product is. I'm using paint, for example, because what it will help create in your mind is a process. And what you want to be able to see is some sort of process, something in reality, so that the costs and the types of conversation we have today make sense. I don't want to be so theoretical. I want it to be more practical. So think about something that has been produced and that you possibly purchased over time, maybe years ago or maybe recently. And think about it like that, and take a step back from being the consumer side of it and shift gears to being the producer side of it. Also, think about service costing as maybe you're going to an attorney or going to an accountant. Service costing. Get those types of images in your head, because I think it will be very helpful as you get through the chapter. As we always talk about, when you're reading the chapter, it's very important to review what types of things this chapter is designed to teach you. The learning objectives. When you're going through the chapter and you're reading it for the first time, it's very important to keep that in mind. You don't want to read beyond what's there. We want to be able to say, this is what I'm supposed to get out of this chapter. I want to understand the themes along line, which design cost systems. I want to talk about how allocation is used. I want to talk about products, how they're used, the system, how it's used, how overhead allocation is allocated to products. We want to talk about two-stage allocation for product costing, and we want to talk about the types of costing systems: job costing, process, and operations. And that's what we're going to go on today. Really important to stay focused and centered on these objectives. It's also important to note that these objectives will be impactful for future chapters, but let's just stay right here in chapter 6. We have gotten through so much in chapter 5. Chapter 5 was, I think, probably the most overwhelming chapter, because it really does dig out of accounting and into finance. And many of us, myself included, don't do too much finance. We do a lot of accounting. We don't do a lot of finance. So using statistics and all of that is new to us. So let's take a break, a time out from the statistics and all of that, and let's just talk about costing and its general application. So it's already oriented for the needs of users. We want to get the users and informed to make some really I would say incisive decisions. The more information we have and the better we use that information, the more likely the decisions that we make will be sound over time. And also, we want to make certain that when we think about costing, it has to be beneficial. That means the cost can't be more than what we're going to get in return, the benefits. So we think about that all the time. Every time we're thinking about how we're going to use costing, what we're going to use, how we're going to use it, where we're going to use it, and how much it's going to cost us, how much are we going to get out of this? And you got to keep that in mind. So the theme of a costing is to provide information relevant for decision making. Okay, we got that. We want to make a decision. We want to be able to cost our products. We want to cost them in such a way that we be able to make money. And if we're not making money, what can we do to make money? Do we remove it? Do we add it? Do we change the process altogether? All those kind of questions can be answered when we analyze data correctly, cost flow data correctly. So we want to accumulate the cost. We want to report the process and how it works, and we want to make some decisions based on it. So we want to know how to make a decision or what to sell, how to set the price. We want to be able to know what our cost of goods sold is. Again, how much our inventory costs us. Again, it is very important to be able to calculate your costs, not just for service and not just for product, but for both. So looking at this diagram, we're looking at, I'm looking at a cost management system, how costs flow. And this is something that is not necessarily new for you, because in your management accounting class, I think it's Accounting 200, we went over this. So this chapter really is an extension of what you've already learned. We're going to go over some things that are much more in detail in this course, but you already have laid a foundation. So let's go back and retrieve that data and that knowledge and apply it here. So We're talking about basic cost flows. Again, direct materials, direct labor, and overhead. Again, we're talking about direct materials are going to be directly associated with a product that we're going to produce, period. The labor, again, manufacturer of an automobile, that's going to be the assembly line people. People who are actually putting nuts and bolts on different parts of a car or something that's being manufactured. And then the overhead is going to be the indirect costs, pretty much. So we already know this, okay? We already know all of this. This is not anything new. So then what do we want to talk about then? We want to just give you a fundamental understanding about the design of cost systems so they can have a focus on how we can do better in our organization. How can we improve the operations of our organization and make it more efficient, and also to make some decisions on whether or not it's actually going to be beneficial, more beneficial than costing to us. So it's really going to be important to always be weighing that cost benefit test. So now think about the cost flow model. Again, we're talking about a product costing system, how we are producing a product. And I'm very, very specific here. We're producing a product. We're making something from raw materials, essentially. So we're going to have a raw materials account. We're going to have WIP. We're going to have finished goods. We're going to see how those costs flow all the way through the process until it's actually done and sold to a customer. Again, this is all fundamental stuff that you've already learned. So just remember, we're going back a little bit and talking about some things that we've already talked about before. So let's remind ourselves of what these terms mean. RW is going to be, RM is going to be our raw materials. Our WIP is going to be our work in process. And FG is going to be our finished goods. This is all the same old thing. So how cost moves through inventory. We start with the beginning balance. Sometimes it's zero, sometimes it's not. We transfer items in. What gets transferred in? Our WIP gets transferred in. What gets transferred out? Our finished goods get transferred out. And then we ultimately have our ending balance. Again, this is not anything new, but let's reiterate. Using an example here, think about how do we see the flow of costs for an organization? How do we allocate costs? Before we allocate costs, we need to know where the costs are and where they're at that point in time when we're doing our evaluation. We're talking about raw materials. Have we done anything with our raw materials at this point? If we have, we're going to have to move it out of raw materials and into work in process. And how we're working on manufacturing this product or whatever it may be, once it is completed its process, we move it into finished goods. Finished goods, it sits, right? It sits there because until a sale happens, it's still inventory and still sits on our books, but it's not still in process. It's actually done, waiting to be sold. And then we take that out of there. Again, we take it out of work in process and we move it to our cost of goods sold. And again, we have to consider in this whole analysis the backdrop of FIFO, LIFO, and all weighted average and all of those types of things, which again, we have learned in previous courses. This is just taking it and integrating it in such a way with the perspective of managerial emphasis. But in the real world, when you think about managerial accounting and all of the things that's being done, they are almost always going to be linking and working alongside of the financial side of it, because the financial accounting does need some of this data that we are actually working with and on the managerial side. So this is not in isolation, however. This is really relevant information, which we already need and will be used for financial purposes, but in certain ways. Certain things we will be using in our managerial and our cost accounting type of orientation that will automatically flow over to financial accounting for us to prepare financial statements and all of that wonderful stuff. So this is stuff that's going to be used on both sides. We're just right now taking the perspective of managerial accounting and using that information, but know this. Financial accountants, they need this. They need to know ending inventory. They need to know what our work in process is. They need to know, for balance sheet purposes, we need to know what our cost of goods sold is. This is information they need because that's going to be on the balance sheet and sometimes going to be on the income statement and producing our net income. So think about that. So as we think about it, just looking at this little diagram, you already know this. We start with a balance. We transfer items in. We transfer items out. And again, transferring out is going to always be finished goods, right? And then we end up with the ending balance. Again, costing with no work in process, beginning work in process. But again, this is all a review. What are our costs at the end of the period? What are we going to be adding to our work in process? What do we take out to come up to our ending balance? Again, these are assets to an organization. Your work in process, your raw materials, your finished goods. These are all levels of our inventory, are little subsets of our inventory. And at the end of the day, the number that's the total inventory is going to flow over to the balance sheet. But again, these are assets to the organization, and we need to track the flow of those costs. to ensure that the presentation of that data, that number, reflects accurately what it costs us so that we can price our products and we can accurately provide profitability information for external users. So our internal users are going to need it, but we're going to also transfer that information over so that external users can make use of that information in terms of financial statements and reporting. So here's another basic example. Again, this chapter is so fundamental because I like it because it really just gets you started with thinking again about how on a manufacturer side of things, how things work, how goods flow from one process to another, and how it ultimately ends up in our finished goods and ultimately sold for revenue. So again, your job in this chapter is to understand how goods flow. How they flow and what transaction shifts them from one section to another section to another section. And again, these are entries actually. When you're talking about you purchase of raw materials and then you move your raw materials from your RM account to your WIP account, that's an entry that has to be made. And then once the product is actually done, you have to take it out of work in process. Again, an entry to finished goods. And when that particular item is sold, you have to take it out of finished goods and move it into cost of goods sold. So again, accounting is always in it. Financial accounting somehow just weeds its way through. So you'll never really be completely free of financial accounting because it always affects it. But the main point is understanding how this cost flows and how to calculate or compute your ending inventory, whether it be work in process ending inventory, etc. So in this example here, again, I'm not going to get into the examples because I want you to read the chapter and to familiarize yourself with the process all over again because we're going to really be digging in deep for the next 3 chapters. So this particular chapter is really a foundation and it's going to overlay everything else that's built upon it. We're going to be going over job costing. We're going to be talking about service costing. We're going to be talking about very specifically in chapter 7, job costing. In chapter 8, we're going to be talking about process costing, very, very specific. In chapter 9, we're going to be talking about activity-based costing. So it really does become important in chapter 6 to really remember the types of things we talked about and how things flow together in terms of costing, whether it be on product producing or in services. So this is a very, very useful and fundamental chapter. I don't think there's much calculations or more complicated calculations in this chapter because I think it's really a iteration of what you've already learned. So go through this chapter and read through it and try to remember some of the concepts that you've learned and go over the concepts that you have to readdress. That some things are just not necessarily easy to remember. So go back and review those areas with a little bit more time that you need to remember those processes. But in the end, this chapter really does serve as a foundation for the chapters that follow, which is chapter 7, chapter 8, and chapter 9. So it's really critical for this chapter for you to really get it because it's going to be helpful for process costing, job costing, as well as ABC costing that you will ultimately be talking about. So using predetermined rates, again, we're talking about costing. And when we are talking about costing, we need to allocate costs. Okay, we have our direct materials, and we have our direct labor, but then we have these costs that are really they're not really directly associated with any particular cost or any particular product that we're producing. Those costs are just as important and they have to be allocated. So how do we allocate it? There are a number of ways to allocate costs. Overhead costs. And that means you can use a predetermined rate. You can use a number of ways. And how do we calculate a predetermined rate? Again, this is a formula. Memorize the formula. All we're doing is saying that this is one way that we can allocate overhead to a product, to a specific product. And here is the estimate here. Again, computation is not all that difficult. What are we doing? We are applying costs, overhead costs, to specific jobs or specific services or specific processes. That's all we're doing. So using a predetermined rate can be used for the job costing system, a process costing system for both service and product, or using ABC. So again, this rate is going to be considered as one of the process or one of the formulas that you'll need to understand in chapter 7, 8, and 9. So remember that. So what are we doing? We are trying to determine whether or not a predetermined overhead rate is appropriate for allocating overhead costs. That's it. So And here is how it's calculated. I would suggest in this chapter understanding the process and what it is and what we're doing. Again, we have our direct materials, we have our direct labor, we have our overhead. We're concerning ourselves with allocating costs. We're going to be focused on the indirect costs, and they are always in the overhead costs. So using the allocation base, again, organizations, it depends on what they're trying what they're using. They might use labor hours as an allocation base. They may use total square footage as an allocation base. They may use total cost as allocation base. It doesn't matter. It's not arbitrary, but it really does depend on the organization and what works best for them. So in the end, you should be told in any kind of questions that you're being asked about how to allocate it using a predetermined rate, they're going to tell you. The allocation is going to be based on direct labor hours. Allocation base is going to be based on this. And you'll know that. That's essentially what it is. You're not going to have to guess. You already know. And the question is, if you know it's direct labor hours, how do you compute the total overhead hour or labor hours to use that as a base and the formula, part of the formula to calculate your cost per unit? All it is. And again, this is something we've already done before. Again, it's all about review. This chapter has so much information in it, but it's nothing in it that I have seen, and I've read through the chapter that's new. And in fact, I think this chapter is pretty much a replica of what you've seen in your management accounting course, Accounting 200. So don't worry, there's nothing new here. I just want to make clear as you're going through the chapter, however, that you need to make certain that any areas that you have covered that you don't remember, to cover them again and reread, because this is going to be our foundation chapter. It's going to lay a lot of information that we're going to be using. Not necessarily all of them at the same time. We may use them some in chapter 7, some in chapter 8, and some in chapter 9. But in the end of it, everything in this chapter is going to be relevant to those 3 chapters. And so it's kind of important to use this chapter as a refresher and to go over some areas that are not necessarily clear. And also ask any questions you have. That would be also another thing that would be important for you. So here is a good way to look at things. And again, what we're trying to figure out is we're allocating overhead. That's going to be very, very important, because it's easy to know your total cost when you're talking about direct labor. And it's easy to know what the total costs are when you're talking about materials. What becomes extremely difficult to determine is the overhead. And how do we accurately apply overhead so that we can get a true cost pool of what it costs for a particular product or a particular process. So allocating your cost accurately is very, very important. And so you're going to see how the emphasis is going to be placed on doing just that. How do we allocate overhead? Is it appropriate? Does it need to change? Does it actually represent truly what's happening with this particular process or this particular job? So allocating overhead is going to be a big, big deal. So really get that in your head, because overhead is indirect costs, and indirect costs are not going to be attributable to any particular job or product. So allocating it appropriately could make a difference on whether or not you overprice or underprice or overallocate or underallocate a job or a process, and could really screw your numbers. And not only screw your numbers, but it also can actually make you make a wrong decision. So it's going to be important. And again, it's 2-stage cost allocation. Most important is, how do we allocate costs? What method by which we're going to allocate costs? And what does that information tell us? How does it help us make decisions? That's it. Don't overthink this. Don't overthink chapter 6. Chapter 6 is a very overview and a very high level chapter, and it has concepts that's going to be used. Again, we're going to drill down in job costing. We're going to drill down in process costing. We're going to drill down in ABC costing. For right now, let's look at the high level and understand the process and how it really matters and what we're trying to accomplish. And then we can get into some very detailed type of conversations and examples. So there are some there are 3 kinds of costing: job cost, process cost, and operational cost. Again, we know this before because we're going to be tracking jobs, job by job by job by job. Job costing is different because job costing is very, very unique. Each job is very specific. It's very, very unique to a contract or something that they're trying to accomplish. Process is more uniform in nature. And again, knowing the difference is always important. And this is all something we've already talked about in previous courses, so I'm not telling you anything new. So know the difference between those two will be very important. Hybrid operational costing is going to be a combination of the two, but again, I would suspect the most often you'll more likely see would be the process and the job costing. But operational costing, again, is just going to be a combination of the two. And they have those characteristics. They'll have characteristics of both the process and the job costing. So as you get through the chapter, don't worry. It's not a lot of computations. It's all review. And as you review the chapter, remember, there are some areas that you're going to see in all three of the subsequent chapters. You're not going to see everything from chapter 6 and chapter 7 and 8 and 9, but you'll be seeing certain aspects. So knowing that is kind of important. Use this chapter as a foundation and always refer back to it when you have questions about chapter 7, 8, or 9. As always, thank you very much for your time in listening to this video, and I will most certainly have any answers to any of your questions that you might have. Thank you very much for your time.